Hello, my name is Victor, and in the next 15 minutes, I want to discuss some exciting news for three specific stocks. PayPal, who may have a fake out buyout. It was a very up and down kind of week for PayPal. Lowe's, we had earnings come in for Lowe's, so definitely want to have a look at those and talk about their projected outlook for the remainder of 2026. And last but not least, Netflix and what appears to be a no deal situation for Warner Brothers. A lot to get into, so let's not waste any time. Let's get right into it. And I want to get us started here with the PayPal fake out because early this past week I saw news everywhere that said that PayPal had a potential buyer for the company, or some company was looking to acquire PayPal entirely. And the stock market seemed to love this news because PayPal was up tremendously for like half of the week. Every single day I looked at PayPal stock, it was up 5%, 6%, 7%. I mean, it was just soaring, all for it to come tumbling down a bit towards the end of the week because, as it turns out, maybe that rumor was not true. Now, the company in question that was potentially looking to acquire PayPal was Stripe, but late last week they denied any acquisition interest, and this sent the stock, PayPal stock, tumbling later in the week. Now, even after the denial of the interest from Stripe, PayPal is still up about 10.5% over the last week. So just the rumor alone that a company was looking to potentially acquire PayPal has been tremendous for the stock. A stock that I have talked about here on my channel for months now. And as sad as it is to say, this is probably the most exciting thing that has happened to PayPal since I started my position. A little bit sad to stop and think about that. But given all of this, given the rumors, given the news, all of the excitement surrounding PayPal, what exactly am I doing with my position after all of this noise? Well, I am continuing to build on my position. When I stopped to think about a potential acquisition of PayPal, I had two thoughts come to mind. Okay, on the one hand, let's say hypothetically that all of the rumors were false. This was all complete, none of this was true. Well, given that I already did my analysis and my projections for PayPal, and I'll leave a video link up here for you if you're interested in looking at those projections, but if nobody is looking to acquire PayPal, then none of that changes. All of my projections, all of my analysis continues the same for the next 2 to 3 years. So there's really no reason to make any drastic changes with my position. Now, on the other hand, if somebody is looking to acquire PayPal, let's say Stripe or Visa or even Apple, because if these companies were looking to acquire PayPal, it's not like they are getting a company that does not have a proven business model. PayPal makes money. They have earnings quarter after quarter and year over year. It's just that they're having a hard time growing the company. But if you were to acquire PayPal, immediately your net earnings would improve because PayPal is making money on the bottom line. Now, if there were to be a potential acquisition, I would probably say, and this is complete speculation on my part, but if we're already hearing rumors about it here in the first quarter of 2026, I would say we could potentially hear about a finalized deal maybe late summer, if not early fall of 2026. Again, that is complete speculation on my part, but if there were to be a total sale of PayPal, what would I do in that situation? If PayPal were to decide to outright sell the entire company to, let's say, a Visa, Apple, or Stripe, just potential buyers, in that scenario, I would sell out of my position. I do not want to deal with any mergers, any potential government regulation coming into play. In that type of scenario, I would just sell my entire PayPal position and be done with it. Now, if there were to be a partial sale, let's say PayPal just wants to sell Venmo or Braintree or a very specific part of the company to one of these competitors, I'd say that I wouldn't outright sell my position, but I would definitely have to look at my projections again, run those numbers again, and then make a decision based on that. But it would probably be a hold in that type of scenario. But as for right now, I am continuing to build. Like I mentioned, I am continuing to build my PayPal position, and I have been buying since the start of the year. Let me go ahead and show you this image here, and this is my purchase history of PayPal since the start of 2026. And as you can see, in early January, I was buying in the upper 50s, the mid 50s. Going into February now, I have been buying in the low 40s, and most recently, this past Friday, I was buying again in the mid 40s. So I'm continuing to build my position. Nothing has changed regarding my projections or my analysis. I still want to get this PayPal position in my personal portfolio to at least double of what I have, if not triple. Now, if there were to be an acquisition here later this year, I will be sure to give you an update on what I am doing with this position. But as of right now, I am continuing to build my PayPal position. But okay, keeping it moving here because we still have two more stocks to talk about in today's video. And the next thing I want to discuss is Lowe's earnings. And I love keeping an eye on Lowe's because it helps me keep track of how strong or how weak the housing market is looking. But as I'm sure you can see based on the colors here, we have some mixed results from Lowe's. So let's get right into it. But starting off with the top line, Lowe's incredibly strong, revenue earnings up 11% compared to this time last year. So love to see that, and honestly, a little bit surprising to be honest with you, from me personally. But then from there is when we start to see a little bit of trouble as we make our way towards the bottom line, because general and administrative expenses were up 15% compared to this time last year. That is a massive jump and a higher percentage than that revenue, which is not something that you want to see. And all around, you can see that operating income was down compared to this time last year. And as we make our way towards that bottom line, net earnings were also down 11% compared to this time last year. So while yes, they had a strong top line, they seemed to struggle to keep that money as it made its way down the income statement. As I did a little bit more research on Lowe's, I found their outlook for 2026, and well, let's just get right into it. Projected revenue for the company in 2026 had a midpoint of about $93 billion, which would be an 8% increase on the top line year over year. So not too bad, not too great either, but projected net income for 2026 at a midpoint they have at $7 billion, which would be a 5% increase year over year. So again, we're starting to see a trend here where revenue seems to not be the problem. It seems to me like they are struggling with the net income. Having that money make its way down to the bottom line and keeping the money seems to be the issue. And personally, I think this cautious outlook is because of headwinds that the company expects to face in 2026. Much like in 2025, we still have what a lot of people are referring to as a frozen housing market. We still have high interest rates that are about 6%, and a lot of the people that were buying houses prior to the pandemic who have like 3 to 4% mortgage rates are not willing to sell their homes to go get into a mortgage rate that is higher than they currently have. And that is completely understandable, but this is causing a lot of problems in the housing market because people just aren't moving. For my portfolio, because I am an investor in Lowe's, I currently have it as a hold in my portfolio. I'm not looking to buy more at the moment, but I'm not looking to get rid of the position either. I do agree with the management here that maybe it is a good thing to have a little bit of a cautious outlook as we go into 2026, at least until we see the fog dissipate a little bit when it comes to the housing market and these high interest rates. And the last stock that we need to talk about is Netflix, because it appears that there is no deal for Warner Brothers on the table anymore for Netflix. And let me go ahead and give you a little bit of backstory on what happened, because it seemed like Netflix was set to make the acquisition of Warner Brothers. Everything was set in stone. But over the last couple of weeks, Netflix actually gave Paramount a week to negotiate with Warner Brothers. And in that negotiation, Paramount was able to lock in a confirmed better deal of $111 billion for the acquisition of Warner Brothers, which was obviously a much better deal compared to Netflix's offer of about $83 billion. They came back to Netflix and said, okay, well, look, we have this much better offer from Paramount. Are you willing to match or counter the offer? And Netflix said, no go, not interested. And Wall Street seemed to love the fact that Netflix is taking a disciplined approach to this potential merger, because Netflix was up 12% after the news that Netflix was not looking to even match the $111 billion offer that Paramount made. So after all of this exciting news, again, just like PayPal, what am I doing with my position? Because it seems like both of these stocks have a lot going on here over the last couple of weeks. And I am here to tell you in this video that I am continuing to build my Netflix position. Short-term news, doesn't really affect my decisions when it comes to building up a position in my portfolio. And just like with PayPal, Netflix is a stock that I am looking to build in my portfolio. And I have been buying since the beginning of the year, just like PayPal. In January, I was buying in the low 90s. I was buying in the low to mid 80s, and here towards the end of February, I have been buying in the mid to high 70s. So I'm continuing to build this position, and I will continue to do so long as the numbers make sense. And in my humble opinion, I think that there are great deals in the stock market right now. PayPal and Netflix being two of the biggest ones, again, in my personal opinion. But I would love to get your opinion on these three stocks in the comments below. Which of these three stocks do you think is the best buy here in early 2026? Or do you completely disagree with my opinions, and do you think all three of these stocks are potential falling knives? I would love to get your opinions in the comments below. If you made it until this point in the video, be sure to give me a like. It helps out tremendously. And as always, I'll catch you in the next one. Peace.